US dollar / the Korean won. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So here we have the pair. We see a 9% gain from the 52-week low for the dollar, 1% from the 52-week highs. So let's jump into the charts. This is in a big picture, weekly data points. And yeah, we have a lot of things going on here. One of the interesting things I see here, that's these repeating patterns. So the inverse head and shoulders pattern, both big, but also small. They have a tendency here to repeat. Here we have another one. Here, inverse head and shoulders pattern. The problem is that, as you can see, they don't have a tendency to actually go to completion. And this is one of the reasons why it is pretty good to buy the low of the head or the right shoulder of an inverse head and shoulders pattern, because if you sit there and always wait for the inverse head and shoulders pattern to break above the neckline, then you very often end up missing big moves, and you end up buying right when the big war begins. The same thing with head and shoulders patterns. If you draw it in like this, head and shoulders. So imagine that you are a bull. So you have massive bullish investments in some company. You are not going to panic here. Nor panic here. But when you see that price starts to threaten the neckline, that is when you are going to start buying heavily. You're going to, contact the people in the business who can pump the stock, analysts, and so on and so forth, to get those upgrades that help the stock price. If there are some good news about the company that hasn't been released yet, then this is the tactical place to release it. So it's very important to just be aware of the psychology of the bulls and the bears. So if you imagine, on the other hand, you have an inverse head and shoulders pattern and you consider the psychology, if you are a bear and you have a massive, short position, you're not going to be that panicky about, a rally here from the low of the head, because that is to be expected. The same thing if we do get a bit of a rally starting to form that right shoulder, it's not a big disaster either, but it's when we start to threaten a bit of a breakout, that's when you are going to get aggressive. So I think that is at least the psychology behind why these patterns, these famous patterns, they fail. They don't fail because technical analysis don't work. They actually fail because it works. Because people know that these levels are very important, that's when the big war breaks out. Okay, a bit of a digression, but it's very important to just be aware of. So yeah, we do certainly have some time cycles here with this pair. The size of the time cycles has varied a bit, but there is this suggestion of potential further strength here. But the biggest move around the corner would be then to the downside. Because that is the history of this pair. It moves up and then it moves down. So yeah, good for bulls, but also good for bears. If we go here to the daily data points, we have this, nice rally here supported by this 20-day moving average. We do have some smaller time cycles here. Smaller time cycles suggest that, there could potentially be a bit more left in this pullback. Now let's look at the other indicators. Okay, so the PPO measures the distance between price and various moving averages here on the weekly data points. When we look here at, the PPO vis-a-vis the 20-week moving average in purple, we are at the higher level. You see that usually, when we go back here to 2010, there could be a little bit more left in the rally, but there is a high probability of a pullback. That is what we tend to see. Same here with, the 50-week moving average. We have been higher here in the past, back in 2015 as an example. But, then you did eventually see that pullback, forming that, the declining phase of the time cycle. So yeah, going here to the daily data points. Here we have the distance from the 200, 150-day, and the 20-day moving average. Yes, we have been higher in the past, and there is reason to suspect, further strength. But the big move, it would be, in the future to the downside. So yes, there's a little bit left here for the bulls, so that the expectation is that they're going to rally more. But the biggest move is most likely going to be in the form of the declining part of the time cycle. Looking at the seasonality, it corroborates the time cycles. So now we are looking at the seasonal strength of the US dollar. Unfortunately, we do not get the US dollar Korean won pair here in stockcharts.com. The dollar tends to see some sharp weakening here into December. Looking at the last 10 years, October, November is strong. Then December and January are more mediocre. Over the last 20 years, November is pretty strong. And one of the strongest months for the dollar, which supports what we saw here with these time cycles. But the period from December into April, it has a higher probability of resulting in some pullback. So yeah, I think that would be my basic take here for this pair. Of course, the best time to go long the dollar, that was towards these low parts of the prior declining phases. So now we have a rising phase that is maturing a bit. There's likely more left in the rally. The key thing though to be aware of are these prior highs, because that's where we have seen historically that the bulls, they just run out of buyers. Sure, it is possible that we are going to see like a breakout above these prior resistance levels and get something like this. That would be, in line with, the dollar milkshake theory. But, when you have a chart like this in front of you, where you have decades of data, it's safest to assume the average price action, and the average price action here is that rallies are followed by pullbacks, and the rallies are usually of a certain size, and then the pullbacks are to an extent they mirror the prior rally. So this here event 2018 to 2019, that is an anomaly. So and you got to be a bit careful about assuming another anomaly. Because if you are systematically trading anomalies or assuming an anomaly, then the odds are so obviously against you.